We've seen rates this high before. What we haven't seen, or better yet, what we've only seen 3 times since 1971, are rates that have jumped this quickly over such a short period of time. I have never sold an ARM in my entire mortgage career until 3 months ago, and I've sold 3 in the last 3 months.
I'm super excited. I talked to lots of people, and I'm very grateful that a friend of mine and phenomenal lender, Jonathan Washburn, is with Barrett Financial. He agreed to talk today. He wrote an outstanding article about the rising interest rates, and it is on top of a lot of my clients' minds, and wanted to at least have him here to talk a little bit. Jonathan, tell everybody a little bit quickly about yourself. How did you get into mortgages? It's kind of not many people grow up and say, I want to be a loan officer. You're obviously coined as a dean of mortgages, but tell a little bit of your background and how you got into the space.
Yeah, I'm the child of 2 school teachers. For as long as I can remember, I wanted to be a teacher. After I got out of college, I went into teaching. After teaching for 4 years, I became a dean of students at the school that I was teaching at, and was having a great time. But we were living in Charleston, South Carolina. My wife is from up here in Northeast Ohio. After we had our second kid, she said, hey, can we consider maybe trying to move back to Ohio? I said, yeah, I'm going to have to find a job. I applied for a bunch of teaching jobs, got rejected for all of them. I don't know why, but maybe Ohio's teaching standards are a little bit higher than South Carolina's, who is always like 49th in the nation with teaching and stuff. Thank God for Arkansas or something, I think we used to say. So yeah, I came up here and I couldn't find a teaching job, and a buddy of mine from college was like, hey, I'm in mortgages, you want to come work with me? And I'm like, oh, it's a job, sure, I'll take it. Got into it, wound up really liking it. So I used to be a dean of students, and now I call myself the dean of mortgages because I love to educate people on the important things to remember when buying a house. Love to work with first-time home buyers that have never purchased a home because they don't know what's going on, and like to kind of teach them through the process. And so that's why I'm doing what I'm doing.
That's awesome. Tell me a little bit right now in this market. It is crazy. And I'll try to put a link to the article. I know it was on Facebook, but I don't know if we posted it elsewhere. I'll put a link to it. But as far as, and I think I know the answer, but I'd like to hear from you. What's the biggest challenge you see that you're facing or the mortgage industry is facing right now? And what are you doing to overcome it?
Yeah, so rates are obviously high, as I'm sure people have heard. Conventional mortgage rates right now are in the mid to high 6s, maybe even in the 7% range if you don't have good credit or if you're not putting a lot of money down. We've seen rates this high before. What we haven't seen, or better yet, what we've only seen 3 times since 1971, are rates that have jumped this quickly over such a short period of time. Only 3 times since 1971 have rates jumped this quickly over the course of 1 year. Last year, last September, Freddie Mac reported that the average interest rate in the country on a conventional 30-year loan was 2.89%. And this September, that jumped up to 6.89%. We saw an increase of 4% in 1 calendar year, which, like I said, has only happened twice in our nation's history since going back to 1971 when Freddie Mac started tracking this. So the specific challenge that we see is not just that rates are high, but when I talk to a client, when I pre-approve a client that then takes that pre-approval to you and says, Joel, I'm pre-approved to buy a $350,000 house. And then they go out with you and they look for 3 weeks, they look for a month and a half, and they finally find one. They finally get their 6th offer accepted. And now they come back to me. I may have pre-approved them when rates were at 4.5, and now rates are at 5.5. So one of 2 things might happen. One, they might not actually even qualify for this house anymore because the interest rate has jumped so much. Or number 2, they qualify, but now it's at a monthly payment range that they're not comfortable with, which might as well be the same thing. So the specific challenge we are having is not just that rates are high, but that rates are rising so quickly. And, for me as a lender, I'm literally touching base with my clients every week to update their pre-approvals. And sometimes it's like, hey, we just lost $20,000 this week. I'm really sorry. Sometimes it's good. And we can track interest rates off of essentially looking at something called mortgage-backed securities. How much are, mortgage-backed securities yielding? In a normal market, mortgage-backed securities might go up 20 basis points or down 20 basis points over the course of, a day.
And that's, I know what you're talking about, but for other people, that's 0.2%.
Right, 0.2%, which for a mortgage interest rate, it might not even affect the actual rate. That's a difference in, hey, today you can get a 4% for free. And then if mortgage-backed securities go down by 20 basis points, tomorrow that same 4% is going to cost you $500 in extra discount points, but it doesn't even change the rate.
Wow.
We're not seeing jumps in the 20 range. Just last week, we lost 175 basis points in one day.
1.75%.
1.75%, which for a mortgage rate, that's the difference between a 4 and a 4.375 in one day. I could have quoted you a 4% today. You could have gone to a house this afternoon, put an offer on it, gotten accepted. I get the contract tomorrow, and when we go to lock you in, you're at a 4.375.
So just so people understand, because there's a disconnect, a lot of people get confused. You said that there's a 175 basis or 1.75% jump. And you said that means it's 4 to 4.375. Why isn't it 4 to 5.75? Because you said 1.75% changes your rate from 4 to 4.375. What does that mean for people looking at things? It means a higher rate, but
Right.
There's a disconnect between 175 basis points.
Yeah.
But it's only increasing the actual rate for 370, 0.375% or 37.5 basis points.
Right. So that's a pretty complex question. I'll just give you a general rule of thumb. For every 100 basis points we go in either direction, that's going to change the interest rate by about 1/4 of a point. Okay. So for 100 basis points, changes the interest rate by about 1/4 of the point. Why? Because there's going to be costs for each rate. You can get whatever rate you want. You just have to pay a different amount for each rate, right? So oftentimes, yeah. So if it goes up 50 basis points, that means you're going to have to pay an extra 50 basis points to keep the same rate, or you'll drop down 1/4 or an eighth, right?
I get you. And that's smart, because you could certainly go down the rabbit hole of finance and all the manipulations. Tell me, so, I'm telling all of my clients, get reapproved or go back to the lender to the same point, because what you could have afforded even last month could be different now. And I'm advising them, if they see something, it's a great time to buy, because even though rates are high, where 3 months ago in my world, people would throw whatever number on the wall and it would stick. Now there is a tremendous amount of price drops. I was at a house, now granted it was 700, they dropped the price $54,000 to get bodies in the door. So I said, yes, you might have to pay an extra, instead of that 3.5, you might be paying 6.5. Your payment might be an extra $1,000 a month, but you're going to save 40, 50, 60,000 or more off the price. And the market fluctuates. No one has a crystal ball, but in 2 to 5 years, refinance, but get the house now, higher monthly payment, but net you're going to be ahead of the game. And I can get deals done. We're not in multiples with 8 other offers coming 50,000 over list with no inspections and appraisal gaps. What are you saying for people? Where do you think the next quarter or next 6 months are going to be, and how are you advising clients?
So let's get to the future in a minute. Let's talk about what you first spoke about first. I think that's excellent advice. We are seeing, for the first time in like 2 years, it's not a huge seller's market anymore. Like you said, you're actually seeing price drops. Because what's happening? The rates have gone up and a lot of buyers have backed out. There is opportunity here to actually go to a house and be the only one that's interested. And you can make an offer to get that house at a better price. Couple things that I've been telling people is to marry the home and date the rate, right? This is the home you want to be in. If you went and looked at this 6 months ago, you would have been one of 23 offers, one of 29 offers. I'm serious. Like, we actually had that many offers on homes 6 months ago, right? And if you weren't coming in cash 20 grand over, you weren't getting the house. So one thing I'm telling people is, like, you have the opportunity to maybe be the only person offering. And sure, you could wait for rates to go down. Let's say rates go back down in 3 months. You know what every other home buyer out there is thinking? that's when I'm going to buy a house. So it's very possible, let's say rates are lower in January. Now you're going back out and look, there's 12 offers on this house again. And now you got to pay over market. Now you got to waive inspections. Now you've got to cover appraisal gaps. What is actually better for you? For your temporary monthly payment, sure, it's better for you that interest rates are lower. But if this is a house you're marrying that you want to be in for the long term, this is actually a really good opportunity, a time right now for you to actually go get it for yourself.
So are you recommending, which I'm suggesting, and love, the thing I love about you is that, there's a lot, we'll get to this a little bit. There are 1,000,003 lenders out there. You can kind of throw a rock, just like a real estate agent, and hit a lender.
Right.
But I love that you're not just an order taker or a green person going through the motions. You study the craft, you do your research, you know what you're talking about, you provide value. When I saw your article, I said, well, this, I already knew you personally and done deals with you personally, but it makes me, you make me look good to my clients because you know your stuff. I've been talking about doing adjustable rate mortgages or ARMs just to do some short term, get that lower rate. It's just a crazy market out there. Going back, I know you said you first time home buyers or people that are looking at the refinance market, I'm sure has dried up. People that are downsizing, just in looking at homes, and I know when I work with first-time home buyers or somebody's downsizing, there are different challenges and different risks. What would you say are high level the top 3 mistakes people make when looking at financing options for their home, when choosing a lender? Outside of obviously, the basics, what would you say are the 3 to 5 biggest things that will save people watching this time, stress, and headache?
Sure. Number one, I would say talk to multiple people. It's just there's a lot of lenders out there that don't want you to talk to other people because they're kind of hiding something, right? I've worked at places in the past where I knew my interest rates weren't very good. I knew my processes weren't very good. I didn't want my people to talk to other people because I knew if they did, there's something better out there. Now, you can drive yourself crazy with this. You don't need to talk to 30 different people and be scared to make a choice, but you should talk to more than one. So that's
very unusual that you would say that. I know a lot of people that are in sales that I don't want you talking to 50 people, not 50, but an extra 2 or 3 just to get a sounding board. Interesting.
Well, again, though, I really do believe that if you have the goods, you're not scared of competition.
I agree with you.
And whenever you talk to somebody that doesn't want you to talk to anybody else and just sign with me, make the decision right now, that's when you should be a little bit skeptical.
Yeah.
Number 2, I would say there are myths that exist about lending that may have been true at one point, but aren't necessarily true right now. And don't be afraid to think outside the box. You mentioned ARMs.
Tell me more.
Right? You mentioned ARMs. Everyone and their mother is scared of ARMs because back in 2004, we were giving people ARMs that were interest-only payments with, for 2 years with no caps, right? So you're paying 2.5% interest only with no cap. And then once that ARM kicks in, now it jumps to a 9 on a fully amortizing. Those ARMs were bad. Those ARMs were dangerous. You're not getting any equity in your house up front, and now all of a sudden your payment is exploding overnight. Everyone and their mother is terrified of an ARM, right? I have never sold an ARM in my entire mortgage career until 3 months ago, and I've sold 3 in the last 3 months. And that's because for these people right now, the ARM makes more sense. The fact is, the average American moves every 5 years, right? But if I have an ARM that's locked for 10 years and you think interest rates are high right now, which they are, but I can get you a lower rate on an ARM right now that's locked in for 10 years. If you think that at any point in time over the next 10 years, rates are going to go down, you can refinance into a fixed rate at that point. And you just saved money over that amount of time that you were in the ARM, right? But, I talk to these people and my dad told me that ARMs are bad. I should get a fix. I'm sure he did. I'm not saying your dad was wrong, because the ARMs that he knew of, the ARMs that were popular back in the day, were borderline predatory. But just hear me out, listen to me on this. I would say the same thing with mortgage insurance, right? If you look at mortgage insurance rates over the last 30 years, there was a time where mortgage insurance was unbelievably, penal, right? It was like paying mortgage insurance. It was just like, it was horrible. It was the worst thing you could do. You're just throwing money away. But if you have really good credit, and you're putting, say, 10% down, your mortgage insurance might be like 0.15%. And so sometimes it's like, hey, I can add mortgage insurance on your loan for an extra $35 a month, and you can keep an extra 40 grand in your pocket. Would you be willing to do this? I actually think that makes a lot of sense for a lot of people. It's true that in the past, mortgage insurance was far more, far more harmful, far more of a significant cost, but it doesn't have to be that way. So I would just say, don't be afraid to step outside the box. The information that you've gleaned from people over the years may have been true at one point, but it doesn't mean it's true right now. There's one other product right now that I think is a great option for people. I don't recommend paying discount points right now. This is where you pay extra money to lower the rate, because normally paying that extra money, it's going to take 2, 3, 4 years just for you to break even. And if rates are going to go down the way I think they are, you might pay 2 discount points today on your mortgage, and you're not going to break even on that for 3.5 years. But if next year rates are back in the 4s, you're going to be refinancing next year, and that will have been wasted money. There is another thing you can do, though, to temporarily lower your interest rate, and that's called a buy down. You can do a 2-1 buy down or a 3-2-1 buy down. And the way these work is that you lower your interest rate for 1 year or for 2 years, right? So if you do a 2-1 buy down and we lock you in at a 6%, for the first year of your mortgage, you'll actually only have a 4% interest rate. And then for year 2, you'll have a 5%. And then for years 3 through 30, you'll be at a 6%. The nice thing about this is if you refinance early, that extra money that was put aside to lower your rate to 4 and 5, you get that. That goes down as principal in your pocket when you refinance.
Interesting.
I think that's a much better use of funds right now, to do the temporary buy down instead of the permanent discount point.
Is that cheaper than a permanent buy down?
It's much cheaper because the seller has to pay for it. You can't buy it down, the seller has to, which brings us to something that you just said. For the first time in 2 years, you may have sellers willing to throw in some seller concessions.
Well, I was going to say, what I'm advising sellers is, rather than a price drop, not to say that that's off the table, but consider buying down the rate. So if you do a 2-3 point buy down, that's something that the seller can cover and make things more comfortable for a buyer. And that really gives the buyer more money in their pocket. So
you should pitch to your sellers to offer the temporary buy down, not the discount point buy down, because first of all, it's probably going to be cheaper. And secondly, that money is going to stay with the buyer if they refinance early. So here's essentially how the temporary buy down works. Let's say that buying your rate down from a 6 to a 4 saves you $2,000 in year 1 and then $1,000 in year 2. What the seller does is he gives $3,000. That's the $2,000 plus the $1,000. He gives the $3,000 to the buyer at closing. Then the mortgage company takes that $3,000 and just applies that to the loan. And we say, all right, your rate's a 4% now for year 1 and a 5% for year 2. And we use that $3,000. It kind of goes into an escrow account to pay the difference, because the buyer actually has a 6, but he only has to pay the 4% and then the 5%, right? And again, if he refinances 6 months from now and there's still $2,500 left in this account, he gets that money. The buyer gets that money. He doesn't lose it like he would if he's paying $8,000 in discount points to lower the interest rate that he's never going to break even on. So yeah, think outside the box. There's some really cool products right now that can help buyers and sellers.
So you mentioned number 1 is to talk to maybe 2, maybe 3 different lenders, just to not 10, 20, but maybe 2 or 3. Number 2 is be open-minded to other solutions, because the products today are very different than they were, 10, even 5 years ago. If you had to say a number 3 big mistake that people make, and maybe there isn't, but if you had to talk a number 3 that would save people a lot of stress, what would that be?
I would say, and this one's going to sound a little bit self-serving for us, but I would say, I believe it, listen to your realtor. everyone thinks that they can figure out how the market works by reading a couple Google ads, right? Reading a couple of articles online. I have seen over the last 12 months to 2 years, I have seen so many of my clients be told directly by their realtor, if you don't offer this, you're not getting the house. And then they say, okay, but I still want to come in at this lower value. And then they don't get the house. And then they're devastated. And then what happens? They have to do this 2, 3, 4 times before they finally listen. And what's happened in the last 6 months to a year? Your pre-approval went from 400,000 to 380 to 350 to 325. And now that you're at the point of listening to the professional, right? The person that's made it his or her job to understand exactly what's going to be needed.
Caveat, they're a professional.
Right.
In your space too, of course.
Oh, absolutely. Well, and that would be the fourth thing. Talk to a lot of lenders, but specifically talk to a purchase lender. There are a lot of loan officers out there that for the last 2 years, they've just kind of sat in a call center and they've called people and they said, hey, what's your interest rate? Oh, it's at a 4.5. We'll give you a 2.5. And their life was easy and they just did a bunch of refis and the stakes are very low on a refinance, right? You're already in a house. Maybe we can save you some money. No big deal if it doesn't go through. On a purchase, you're paying for an inspection, you're putting earnest money down, you're paying for an appraisal, you're selling your house, you're telling your landlord you're going to break your lease. And if this stuff doesn't go through, you could quite literally be homeless. And the person that was buying your house could be homeless. And the person whose house you were buying is now buying a fourth house and they're in trouble. So you want to specifically work with loan officers that are purchase loan officers that understand the stakes, that understand the importance of closing deadlines and closing dates. So those are the 4 things I think I would say.
That's perfect. In full disclosure, you are one of my preferred lenders. So I tell my clients they can talk to anyone they want, and I give them typically a few names. Here's one of them. And I tell my clients, look, someone said this to me the other day. I don't always agree, but they said, maybe you heard this. There's 3 things you can have with any service that you use: good, cheap, fast. You can only pick 2. So the people that I might partner with and recommend might not be the absolute rock bottom cheapest. They're certainly not the most expensive, but I don't have to worry that when you need something done, you need an exception, you need a pre-approval, you need to have something clear that's wonky, that is not explainable, they can get a hold of you. If it's some call center out in the Philippines or pick a place and you need to wait till Monday and it's Friday night and there's something that needs to get done, yeah, you might have saved $300 on those processing fees.
Yeah.
You got all these moving parts, especially in a purchase. There's something to be said for the old adage, you get what you pay for, usually. Not always, but you can have a little bit of the best of both worlds: good service, fast service, and have it be affordable. So that's why it makes sense. Tell me a little bit quickly, because as we wrap up, appreciate the time on everything. You mentioned a little bit of the future. Where do you see things going in the next 3 months, 6 months, next year? Obviously, the further out you look, the less likely is to occur. But do you see things getting better or worse, short term, mid term, long term? What are you thinking?
Yeah. So I will tell you. So I subscribe to a couple different experts, to try to forecast this. Okay, and I'll tell you that there are essentially kind of 2 pools of experts. There's the pool that tends to be a little bit more pessimistic, and then there's the pool that tends to be a little bit more optimistic. And I think it's important to follow both, right? You got to filter through the optimism sometimes, because these are the people that want things to be good. And you're stepping back like, I don't know if it is. I'll tell you, in March, the pessimists were saying rates are going to get up to the 7s and 8s. And the optimists were saying rates are going to even out in July and they'll go back down. The pessimists were right. Okay. The pessimists were right. Today, the pessimists are actually saying we're going to be here at 7, 8% for a very short period of time. And we think that in January, things are going to get better. The pessimists are saying we think 3, 4 months from now, rates are going to go back down. And the optimists are saying we were right all along. It's just taking a little bit longer than what we said. We thought it'd be July. It's probably going to be January, right? both pools seem to be in agreement that they think that this is going to be turning around January, February. I don't know, right? We have no idea. If we go to nuclear war, nobody knows anything, right? If stuff happened last week, we lost 175 basis points in one day because Great Britain decided to do something with their economy that affected us over here. So nobody really knows anything. I would be shocked if rates stay in the high sixes and sevens for the next year, 2, 3. I would be shocked, but it's possible. I'm just here to tell you what the two pools are kind of saying.
That's interesting, and you mentioned you hit something interesting, and I get this question a lot. And I defer it over to typically someone like you. People say, well, why are rates so high? Is it just because the Fed increased things? And I go, well, there's a lot of things going on to it, but we almost doubled the cost of money from 3 months ago to now, like double. And to your point, maybe that person is pre-approved for less, or on the flip side, that person's going to have to spend more to get that same house that they want. But what is there one direct thing that has made that huge, 2, 3 times in 40, 50 years occurring? Is there one or two things that you could say the reason why this is spiking so much is because of blah? Is it raise rates, or we're in a recession? What's the cause here?
I do think that there are 3 things that have contributed. Before I mention those 3 things, I want to drop one of my favorite quotes. It's this: to every complex solution, to every complex question, there is a solution that is simple, clear, and wrong. All right. So
who said that quote? Who said that quote? I like it. I might steal it.
I can't remember. I have to look it up and send it to you afterwards. But yeah, we have a complex problem right now. I can give you an answer that is clear and simple, and it's most likely wrong. Okay, because this is something with a bunch of layers. I will mention 3 things specifically, though.
Perfect.
When COVID started, the federal government made a decision to take all of their money out of a bunch of investments and to buy never before seen levels of mortgage-backed securities. Over the course of about a year, the federal government bought more than $2 trillion worth of mortgage-backed securities. And when the Fed is buying mortgages, they're very easy to sell. So when they're easy to sell, what happens to mortgage rates? They go down, down, down. All right. That was an artificial thing that was never going to last forever, right? There are loan officers out there that will tell you rates will be in the 2s again someday. I doubt this. We've never seen rates in the 2s. Yeah. I locked a guy at a 1.99% on a 15-year. Now, he paid 3 points to get that. I told him it was ridiculous to do that, but he's like, John, my buddy has a 2.25%, and I want the bragging rights, right? But those rates were available, right? I don't think we're ever going back to that, because I don't think the Fed is going to buy $2 trillion worth of MBS over a short period of time. So when they stopped that, that made rates go from 289 up to 389, right? That's fair. Give a whole point, maybe even more, just right there.
Supply demand, easy. What's number 2?
Secondly, the economy, right? The economy is in a rough shape. So what you're often going to see is when the economy is in this position, people are going to take their money out of riskier investments, and they're going to place them into safer investments. People put a lot of money into the 10-year treasury over the last year. And if you look at history, the 10-year treasury and mortgage rates kind of have an exact converse relationship, right? As the 10-year treasury goes up, mortgage interest rates also go higher. As less people buy the 10-year treasury, mortgage rates will go down. But if people were concerned about the economy, they're concerned that people might start foreclosing on their homes. They stopped putting money into mortgages, started investing in other things. So that's the second thing. Number 3, the Fed hiking interest rates actually has no effect on 30-year fixed rates.
Get out of here.
It has no effect on those, because the federal funds rate affects revolving interest rates. So like credit card interest rates are going to go up when they're
floating rates,
right? Floating rates. And it also affects adjustable rate mortgages.
Yep.
It also affects checking and savings accounts at your bank. You may have noticed for the first time in several years, oh, look, I saw a bank that's advertising 3% on a money market account. Where's that been? Well, that's because the federal funds rate is finally up. So it affects that. it doesn't affect 30-year fix. But what happens is the arms start going up. And so lenders are like, well, if the arms are going to go up, let's just raise the fixed rates up too, just because we kind of can. So those are three factors that have played into it. Ukraine plays a factor. What Great Britain did last week, plays a factor. Inflation plays a factor. There's a lot of factors, but it's really those first two that were the specific catalysts to go from 289 to mid sixes in less than 12 months.
Jonathan, this information has been extremely informative. I got a lot out of this. I hope my followers and people watching this get a lot out of it. I'm going to put your information below as well as in the screen notes. So if people have specific questions on purchasing, refinancing, I know there's no cost, there's no obligation. You're always a wealth of knowledge and happy to share ideas, creative, and you also have a broad wealth of knowledge. Being a broker, you have, I think, how many 20, 50, 100 different lending sources as opposed to nothing wrong with a big branch, PMC, Wells Fargo, Key, US Bank. They're great. They have their product and typically only their product. You've got a lot more choices.
Sure.
But I'll give that information. We'll finish up if we can with the Fast 7. This is kind of a quick word association. I'm just going to go list of questions I'd like to ask. Give me a quick answer and we'll wrap up. So in your business, is there a favorite tool that you use in your business?
Loan Sifter. This is a device I have that I can compare rates of 103 different lenders in one search. So I put in $400,000 loan, 20% down. Who's got the best rate? This is, and I love what you said earlier. You can't be the fastest, the best, and the quickest.
Fastest,
right?
the best, and the cheapest. You can't be all three.
Yeah, fastest, best. Yeah, fastest, cheap. Yeah. So I'll always have a cheap one. They're probably not the fastest, right? I'll always have a fast one. They're not going to be the cheapest. But now I can talk to my client and be like, hey, do you want to fly Spirit Airlines on this? You'll get there the cheapest. You'll hate your experience the whole time, but we will get there the cheapest way. Or do we want to fly Delta? A little bit more money, but the whole time you're going to feel pretty good.
But I love that you give the option. You give the option. That's amazing that you could put in the keys and get 130 plus lenders and sift through that fast. 2, what are your biggest personal passions?
Biggest personal passions. I love the Indiana Pacers. So that's just pretty sad for me, but it is what it is. Fell in love with Reggie Miller when I was a little kid and I still love them. I also love coaching my son on the soccer field. So those are probably my two of my 3 biggest. And then, man, I love watching TV with my wife. I love starting a new show together. This is a show with 4 seasons. We're going to see the characters develop. We're going to see the story, play out. Kids go to bed.
I got to ask selfishly, the top 3 shows off the top of your head right now. It could change in a minute, but right now, top 3 shows.
The Wire, Mr. Robot, and Succession. Probably my 3 favorite shows.
I love it. What are some things that you're researching right now the most? Are you researching, personal, professional? What are 2 or 3 things that you're researching?
2 or 3 things that I'm
or even
researching.
One thing. Is there anything that you're diving into that you're finding interesting? It could be a personal thing or professional.
I have been diving into the ins and outs of why mortgage rates are doing what they're doing because they've been doing crazy things. So I have been spending a lot of time studying that.
Perfect.
I actually went to seminary. So I have been studying. This is going to be real inside baseball for maybe 3 people, but I've been studying the relationship of the Holy Spirit between Old Testament believers and New Testament believers. I've been spending a lot of time studying that recently.
That's so cool. That's so cool. People could talk to you personally on that if they're interested. Just get it through. What is there a book or podcast or anything that you've been reading recently that's made a big impact on you, or is there a book or a podcast that has made the biggest impact on you?
My favorite work of fiction is Les Miserables by Victor Hugo. I think it is a masterpiece. You're thinking, why is he spending a whole chapter describing the sewer system in Paris? And then 8 chapters later, you see a guy being dragged through the sewer system in Paris, and you realize there was a payoff here, and it is perfect.
I love it.
My favorite piece of nonfiction is a book by C.S. Lewis called Mere Christianity. I read it once a year. So those are probably my two favorite books.
I love it. Thank you. If you can go back in time when you started in work, what would you tell your past self to do differently?
Ask more questions. I am a conformist by nature, probably. So if you tell me, John, do this, and John, just do it this way, I was very often the person say, okay. And then I would do it that way for 6 months. And the whole time I'm thinking, I feel like there's a better way to do this, but I just did it because that's what they told me. So I feel like I would ask a few more questions up front, because that's really how you can make your processes better. And that's ultimately what led me into the broker world with my buddy Nick, starting our own branch, because we had asked so many questions and we just thought we should just do this ourselves. So
I love it. Now, if you had to go back in time to your 20-year-old self, is there anything you would tell your 20-year self to do differently? And that might be the same answer. Don't be such a conformist.
I would tell my 20-year-old self, stop arguing with so many people.
Perfect.
Which that may not make sense that I'm a conformist and also an arguer, but like, I argued about so many stupid things that just killed relationships, right? Like, I asked questions and things that were not ultimate, but I didn't ask questions and things that were ultimate, right? And so I think I would have reversed that, right? Hey, these things really matter. Spend a little bit more time discussing them and trying to make it better. Oh, LeBron versus MJ, waste 4 hours on this with people that you don't know online, right? I would have tell 20-year-old me, stop with the nonsense and worry about what matters.
I love it. Last question. Is there anything I missed that you want to share with people? We're going to share, I'm going to share in the notes as well as, in the video. You have your own business, you have your own brokerage. I'm going to share how people can get a hold of you, but is there anything else that I missed that you'd want people to know, either about you or anything we discussed?
I would say, when you're talking to multiple people, talk to a mortgage broker if you can. That's what we are. We're a mortgage broker. We can currently write loans with 103 different lenders. And so what this gives us the opportunity to do is to look at 103 different options and weigh them all on that speed, quality, cheap, scale, and come up with the best option for people. And so having that flexibility has enabled us to really give our clients a better service. And we're just, we're really excited to do that.
I love it. So guys, there you have it. Jonathan Washburn, the Dean of Mortgages. He says that rates are going up because of macroeconomic issues such as Great Britain. The federal rate hike has very little to do with it. What was going on with COVID and treasury purchases. And he's got Loan Sifter, which will go through 103 different programs, and a click of a button, tell him best program. If you want to fly first class Delta or Spirit Airlines, he's got a few different options he can share with you. Talk to a few different lenders. And if you have questions, he's more than happy to talk. Jonathan, of course, as always, appreciate your time and sharing your wealth of information and knowledge. And hopefully people take advantage and get a hold of you for those questions that they have. Have a great rest of the week, and always good seeing you. We'll be in touch.
Appreciate it. This was fun. Thank you so much.
Take care.